Hi everyone, welcome to the Mighty Trades channel. My name is Johar. Welcome to another episode of Weekend Technical Analysis. So last week we concluded our episode with Rain Industries. So let's move on to EIDPARRY. So EIDPARRY is a sugar stock, and we are looking at the weekly chart right now, candlestick pattern. Let me just look at the monthly chart. So definitely a huge breakout came here, about 385 rupees. Since then the stock has moved up from this level by 35%. Now let's look at a shorter time frame. Let's look at the weekly time frame here, and let's see. So this was the previous all-time high, and now it's gone 38% above that. So already a significant run-up has happened. Just look at this. I mean, since 7th of March the stock has been just running like crazy. Let's look at the daily chart. And on the daily chart, what you can sort of see is maybe like a cup with handle pattern. So if we switch over to the line chart here, you can see it more clearly. Let me draw this. So this is the cup, and this is the handle. That's sort of got built over here. A small handle. And then the breakout has happened above the neckline. Now let's switch over back to the candlestick pattern. And so the neckline was broken, went up, retested the neckline, and it's now moving up again. So a cup with handle pattern is usually considered as a bullish continuation pattern. And since all the sugar stocks are sort of running up anyways, let's see what sort of risk to reward ratio we can get from here. So if we were to buy this, let's say at this current price itself, then the risk to reward ratio in this case would be, let's put this here. Okay, so from this position the reward is 20% and the stop loss would be around here. So reward of 20% for a risk of 8%. So this would be the stop loss, the bottom of the handle. So not really good odds. Better. So for a short-term trader, probably you can take this if you like the odds, but I would personally avoid these kind of stocks. However, from looking at the strong momentum that the stock has, if you go back to the weekly chart, and if I put the super trend here, yeah, so you will see that the stock has been in an extremely good momentum since June 2020. It did not break its super trend support, immediately bounced from there and has made an all-time high. So from a momentum trading perspective, I think you should definitely enter into the stock if you're a momentum trader. If you can get it somewhere here between 500 rupees, then that would be a very good risk to reward ratio. So let's add this to the tracker, but we'll keep our buying price somewhere here, because I wouldn't want to risk anything more than 5%. So if we can get it somewhere close to this price at 500 rupees, that would be a good place to enter the trade. So adding it to the tracker, this month still April. The date is, actually I'm just thinking, yeah, then the gain is 25% from this price onwards. Okay, so it might come and retest this level. It might not. If it does, it would be a good trade to enter. If it does not, then it's okay to let it go. We don't need to go and dance in every party, you know. So the price as of today is 530.95. So it's in strong momentum. Cup with handle pattern. breakout already done, wait for retest, for better risk to reward ratio. Okay, so our target entry price is, what is this, 511 rupees. Our target is going to be 640. The stop loss is 485. The potential loss is 5 rupees, and we are currently waiting for entry. And this is the current market price. Alright, moving over to Irb Infrastructure. Okay, let's see. Let's look at the 5-year chart on the weekly basis. Okay, let's switch over to the monthly chart. Alright, so clearly we can see that this zone, that the price is currently in a very strong resistance zone, right? This from all the way till here, which is 315 rupees, to this entire area, 280 rupees. So there is almost a 30-40 rupees zone between 280 and 320, which is a very strong resistance zone. So we can see previously what happened from 2014 all the way to 2018. For 4 years it consolidated in this zone. Then in 2018, May 2018, the stock corrected, and now it's again going back up, and now it's again consolidating in this zone. Let's go and look at the fundamentals to see if anything has improved in the company over the years or not. So this previous all-time high was made in August of 2010. So let's have a look at the financials of 2010 first. So if we look here, okay, so the sales were 1700 crores, the profit before tax was 417, the net profit was 385 crores. Now if we go over today, then the sales are close to 6000 crores. The profit before tax is still the same, 454 crores. The net profit is down to 284 crores. Now why is the profit before tax lower? Because that interest payments have significantly increased year over year, right? At this point in 2010 they had only 250 crores in interest payments, and now their interest payments are close to 2000 crores. The profit margin is still pretty much the same, in about 45, but this has really gone up. So let's go and take a look at the balance sheet. Then yeah, if we look here, their borrowings are at an all-time high right now of 20,000 crores. So not a great sign. And if we look at the shareholding pattern also, okay, foreign institutions are holding a very big chunk here at 48%. Domestic institutions have reduced their positions from 13 down to 6. Public holding is going down. The promoter holding has gone from 58 to 34%. And in FIs also, it seems like this institution has bought close to 25% stake, and then another bricklayers institution has bought around 17%. So not sure what's happening here. So anyways, we have to wait for the price to go above 283 to give any bullish indication for any momentum. Until then, it's better to avoid the stock, because there's no idea for how long it will continue to consolidate in this zone. So the financials have definitely improved in terms of their sales, but their profitability has not improved because they are paying a lot of interest on their borrowings. And in the current market situation, you want to avoid companies which have a lot of debt. So it's better to stay away from the stock right now. Moving over to Orient Electric. Okay, let's see here. We are looking at the weekly chart. So it looks like it listed on 2018, moved up over here, and then came the COVID crash of 2020, then moved up from there, and now it's sort of still positive, but it seems to have lost like momentum, I would say. So there is no real chart pattern or chart structure or anything that I see that would make me want to take any trading position in this right now. So better to avoid. It already broke out from its all-time high and moved up by say about 40%. So better to avoid right now. I think it might consolidate here for a couple of months or weeks and then move up. Moving over to PVR. Okay, so PVR was on an absolute bull run from 2011 onwards. Then came the COVID crash over here. It crashed down to 700 rupees, and now it's sort of retesting its previous COVID high. So if you look at the weekly chart, we can clearly see a nice pattern here of higher highs and lower lows, right? This is a higher high, this is a lower low, another high, then this possibly could be a new low that it's making. So definitely a nice stock and momentum. I think we should wait for a breakout above this previous all-time high of approximately 2040 rupees, because after this then your target really becomes massive. Essentially the target would become just the depth of this put right on top. So then the target will become 3380 rupees. So let's wait for it to break out above 2000 rupees. I think it might take a while for it to do that. Also, there are a lot of corporate developments also happening over here. I think the PVR is merging with some company, if I'm not wrong. I forgot the company's name. PVR merger with Sinopolis. Yeah. So these two entities are merging together, which would make it the largest cinema screen company in India. So let's wait for it to give a breakout above 2040 levels, and then we should be good to enter into this trade. So noting this down in our tracker, PVR. Let me update, sorry, today's date. Today's date is 30th April. While I'm recording this, then this is 1828 is the price as of today. So, okay. Chart in strong momentum, making higher highs and higher lows. Corporate, I would say these are positive corporate developments with merging with Sinopolis. Breakout above previous all-time high can make big moves. Okay. Now what will be the stop loss in this case? I think we'll have to wait to see how that breakout happens, what type of candle or if any sort of pattern is forming before the breakout. So depending on that, we will decide the stop loss. For now, I'm not noting any stop loss since we are not entering this trade. The target is 3,350. Let's just keep that for simplicity's sake. So the potential gain is about 64%. Stop loss we are not mentioning right now, and the current market price will keep getting updated on this side. All right, moving on to HUDCO, Housing and Urban. What's this company name? Housing and Urban. All right. Housing and Urban Development Corporation. Okay, I have no idea what this company does, but I'm guessing they are either into financing houses or they are into construction. Primarily financing houses and urban development activities in the country. Yeah, so they are a financing company. So let's see what's happening here. Okay, so they have been listed since 2017. Let me see on BSE if they have data from before. Okay, no. So BSE is also the same date. Okay, so looking at the back to the NSE chart, we are looking at the weekly chart right now. We're looking at the past 5 years of movement. So we can see that the previous all-time high was made back in July 2017 at 102 rupees. So this is very close to its listing time, and since then it's just been on a complete bear run, right? It came down all the way till here, made a bottom in the COVID fall of 18 rupees, gave a breakout from here, moved up to these levels, and again it's back to pretty much its previous consolidation zone before the COVID fall. Now let's see if since 2017 the company's financials or fundamentals have improved or not. So this was made in July 2017. So let's go quickly down to the profit and loss statement and let's look here. So in March 2017 their revenue was 3,500 crores. Their profit before tax was 1175 crores and the net profit was 842 crores. Now coming to today, their sales are 7,000 rupees, 7,000 crores and above. If you especially look at the last 2 years, their profit before tax has doubled to 2,067 crores compared to 2017, and their net profit has also close to doubled at 1,500,000 crores. Sorry, at 1,500 crores. So all in all, the company's financials have definitely improved over the years. If you look at the quarterly results also, then this quarter it's been very consistent, posting revenues of above 1,700, 1,800 crores year, quarter over quarter. Their profit is also very much stable, north of 400 crores. And if you look at the shareholding pattern, let's see if anything's happening here. Nothing much seems to be happening here. The promoters are holding 80% of the stake. So President of India. Okay, so this is a PSU stock that I was not aware of. Domestic institutions are definitely buying up. Public holding is also going slightly up, largely the same over the last 3 quarters. So the company's fundamentals have improved, but I'm guessing because it's a PSU stock, there is not much interest in this from FIIs or anyone else. If this was a private entity, definitely this would have been a good price to enter from a contrarian perspective, where you just follow a very simple principle that if a company is posting its highest ever quarterly net profits, then the price should catch up to its all-time high levels again. But as of now, there's a PSU stock. There seems to be zero momentum in the stock since June last year. So it's better to avoid this kind of a trade right now. Moving over to EIHOTEL. EIHOTEL in extremely strong momentum. Let's put the super trend here and you can see, apart from a brief period here, the stock has been consistently going up, making higher highs and higher lows in the process. So very strong indeed. If we look at the weekly chart here, all right, so it has broken out from this resistance area, right, very strongly right here. So it's broken out from here, then it did a retest and now it's going up again. And also another thing that I'm seeing is I'm seeing a an ascending triangle formed over here. Let me switch this over to the line chart. So if you connect all these lows, you can see that all the lows are moving up, right? So this looks like a symmetrical triangle breakout that has happened in the as per the chart pattern. And if we are to take that, then the target as per this should be somewhere close to here, which is also its previous resistance zone. So definitely a good trade to take. I think it's in very strong momentum, definitely. People are traveling more. Hotel stocks are coming out with good results. Let's see if this company has come out with good results. Let's see. Okay, so they haven't released their previous quarter's results yet. But if we look at the shareholding pattern, in the shareholding pattern also it looks like FIIs have taken a marginal increase in their stake. Domestic institutions are pretty much the same at 14%. Public holding is also at pretty much the same levels. And okay, so ITC is also pretty heavily invested in EIHOTEL, so that's also a good sign. So even in the public holding, you can see that there are many big names, right? You can see Reliance Strategic Business Ventures, you can see ITC. So public is holding. In the public holding also, there are very strong hands that are holding the stock. So definitely a brilliant trading opportunity in my opinion. Let's see what risk to reward ratio can we get. So over here it will be very simple. We have a nice retest already done. So from here the target is 18% and the loss would only be here. We would keep this low of this previous candle. So let me switch over to a daily chart. So this red candle's low will be my stop loss, and this is 150 rupees and the target is 190 rupees. Okay, let's add this to our tracker. This is a nice short-term trade which I think has a very high chance of succeeding. Okay. So it's 160.40, ascending triangle breakout. Strong momentum. Hotel stocks will post good results due to opening of economy. The target entry price will be the current market price itself. The target is 190. Potential gain is 18.5%. The stop loss is going to be 150.35. Potential loss is 6%, and this trade is active. I'm going to put the buy date of Monday, which is May 2nd. So whatever will be the closing price tomorrow is what we'll buy at. Okay. Please note that none of the information that I am sharing or discussing here is an investment advice. This is all just for knowledge sharing purposes. You will have to do your own research before making any investment decisions. Just want to make that clear. And all these buy dates, etc., these are just placeholders. These are all hypothetical paper trades. I do take some of these trades myself in my accounts, and I will share those trade details if and when those targets or stop losses are hit. Obviously I don't have all the money to take all these trades, but wherever I do find an opportunity to enter at the right level, and if I have the cash, I do enter those trades. So those will be shared in due time. Moving on to Aegis Chemicals. Okay, interesting, very interesting. Okay, so there are a couple of things that I can immediately spot from here. The first thing that I can see is that there is a very significant RSI divergence that I can see here. So You can see this low made in November 21 and this low made in February 22nd. This low is higher, this low is lower, but if you look at RSI, then RSI's low is lower here, but the RSI's low is higher here, even though the price is larger, even though the price has gone further down. Let me just check how many candles is this. Okay, so that's 14 candles. So 14 weeks gap has been there. So that's one thing I'm seeing. Second thing that I can see is that there seems to be sort of like a rounding bottom formation that's happening over here, right? So in that case, a breakout above this level will lead it, I believe, directly to this point right here. I mean, I don't see any resistance in the middle. It should go directly to its previous all-time high. This is the next logical resistance for the stock. Let's look at the fundamentals one, because I have no idea what this company Aegis Logistics does. So ROC is good, 16%. It's above 15. Very nice. Debt to equity is under 1. That's also a good sign. Let's look at the financials ones to understand what's happening. So sales wise, they were doing pretty well in 2019. In 2020, those revenues dropped. They seem to be picking up from December 2021 onwards. So March 2020, I mean, last year seems to have been a very bad year for this company for some reason. Not sure why. Profitability wise, profit have gone up even though the sales have gone down. So that could be maybe because of some taxation issues. As you can see here, they were being charged 26-27% tax, but here they only got charged 18 and 17% tax. So not sure what's happening exactly there. If you look at the shareholding pattern, so the FII's holding has been stable for the last 5 quarters or around 15%. Domestic institutions have picked up a 1% stake in the last quarter. Public holding has gone down by close to 1%. Over here also there seems to be a strong HNI investor here, Sudhir Om Prakash Malhotra, who's holding 4.5% stake, probably related to the promoter or something like that. But definitely a strong chart pattern. It's been consolidating here for the last 5-6 months already. It seems like it's going to break out, and if and when it does, it should definitely head over to its previous resistance. There is also the support of RSI that I can see here. So all in all, I think it's a decent enough trade to take. So I'm adding this to our tracker, Aegis Chem. Once April, date's 30th April, the price as of today is 221.45. So what have we spotted today is the RSI divergence on weekly candle, then rounding bottom formation, no resistance visible above, what is our price point, 250 odd rupees, somewhere close to 250 rupees. So what's our target entry price going to be? 250. What's our target going to be? The target will be this level right here. So target's 379 rupees. So potential gain of 51%. The stop loss in this case will be, let's go a little closer and see what's happening. So if a breakout happens from here, let's switch over to the line chart once. Yep. So this would be my stop loss. So a potential gain of 51% for a potential loss of 13.5%. This seems like the right level where if the price breaks this, then it would basically lose whatever momentum it would have built up, and we would have to wait for another re-entry opportunity. So the stop loss here is 221, which is very close to the current price itself. Potential loss of 11%. As this thing showing 13.5%. Or is it 216? Looks like it's 216. Yeah, it's 216. Sorry, it's 216. And this trade we are waiting for entry. All right, moving on to the next trade, which is Sapphire Foods. Looks like it's a new listing, very little data to make sense of anything, so I'm not going to discuss this further. If we look at AstraZeneca, this stock after a significant upside that it made after the COVID fall, especially. So if we look here, this was the COVID crash that happened. Then it broke out from here and moved up by, sorry about that, moved up by here. It moved up from this level and all the way till 70%, and now it has deeply corrected again, and it's sort of consolidating at its previous resistance, previous all-time high resistance over here. So nothing to see here. Stocks consolidating, no trading opportunity. Moving on to Bbtc, again don't see much scope for any up move, although the volume last week is very significant. But if you look at the chart, it's largely been consolidating in this zone since a very long time. And if we were to draw a trend line from here to here, it looks like this is a very strong resistance trend line that first needs to be taken out to see any significant up move. I don't think it's going to move up very strongly. It's made these large volume bars in the past as well, only to consolidate and then just like fall. Better to stay away. I don't even know what Bombay Burma does. I have no clue what they are and what they do. But there are phases, I think, in the stock where when it breaks out, it just moves up very quickly and then consolidates for a very long time, and then again breaks out, moves up very quickly, then consolidates for a significant amount of time. Right now it's consolidating since the last 5 years odd, and to get that, to get this kind of move that it's made in the past, it needs to cross a significant high of its previously. So I would only be interested in this stock if it were to break this 1500 rupees level, and then I would be confident in saying that okay, something different might be happening over here. So moving to PRINCEPIPE. PRINCEPIPE also seems to be consolidating in this range since last year. So this high was made in May 2021, consolidated, moved up again, and now it's again consolidating. So don't see much scope for anything happening right now. We have to wait for it to give a closing above this price to see any new price action developing. Moving on to Glenmark Life Sciences, stock is in complete downtrend, nothing to discuss here. Moving over to Balrampur Chini. So this very similar to the first stock we discussed, like here EIDPARRY. This is also a sugar stock, making consistently higher highs and higher lows, as you can clearly see via the super trend also. If we look at the last 5 years movement, so this was a low registered in COVID, and after that it's just been on an absolute bull run with very strong momentum, making higher high, higher low, a new high, a new higher low, another new high, and now possibly making a new low. So this would be maybe a good time for momentum traders to get into the action. I don't see any particular chart pattern as such to support any further up move or target, but definitely you can, if you're a momentum trader and if you feel sugar stocks are still going to go up further from here, then you can maybe possibly enter somewhere close to this zone. I think it's very close to its new low right now. Moving over to Avanti feeds, switching over to the weekly chart. Don't see anything here right now, consolidating in this range since a very long time. So any new up move will only be possible above 670 rupees. So better to avoid this stock right now. Let's go over to Tv18 Broadcast. And something has definitely happened last week that I'm not sure what happened. Let's go here. Let's see. It seems like it's dropped by 25% in 1 week. That's crazy. I mean, I've been tracking the stock for a while and it's been going significantly higher this year, especially. You can see this move. Not sure why the stock dropped so much. Maybe we can find something over down the money control forum. Let's see what other people are saying. So this is also something that I use just to gauge the sentiment around a particular stock. Let's see, Tv18 Broadcast. Let's go over to forums. Let's see what people are saying. So no clarity on stake till now. How can companies be so insensitive? Looking in the market is easy. Okay, there seems to be some spammy comments here. Okay, so that's not true either. If it was just Viacom selling off the stake to Bodhi Tree, there would be no primary capital. This won't be a big deal. The zeal of trading comes, the red color in our portfolio. Okay, stock crashed today in 2 days, but no clarity from the management. Adani and Tata groups are investors friendly. No hope from the stock. The details of the deals are incomplete. The stock, okay. So there seems to be some sort of stake sale or some other deal which is happening. Let's try and find out some more details. Okay, let's see what does Business Standard have to say. Alright, so shares of Reliance Group companies slipped 19% on BSE. Okay, the investors book profit of the two companies after Reliance and Viacom 18 announced partnership with Bodhi Tree Systems. Okay. So Reliance and Viacom 18 on Wednesday announced a strategic partnership with Bodhi Tree Systems, which is a platform of James Murdoch's Lupa Systems and Uday Shankar, to form one of the largest TV and digital streaming companies in India. Bodhi Tree Systems is leading a fundraise with a consortium of investors to invest rupees 13,500 crore in Viacom 18 to jointly build India's leading entertainment platform to transform the streaming first approach. Okay. So I guess they're selling stake to someone in Tv18. Not sure why investors are unhappy about this, but definitely this is not a very good sign. The stock price has tanked massively. I mean, I feel bad for anyone who was holding this trade, especially after they saw maybe this breakout or something happen over here, and just see your stock come back to these levels is not a good sight at all. But do keep this in your watch list. This is a corporate development which I'm not sure why it's been taken negatively, but do keep it in a watch list. If and when a reversal does come, it will be very sharp and very quick. Okay, looking at Sundaram Clayton. So stock was in a downtrend since 2017. Made its bottom here at 1300 rupees in the cold fall, then very sharply moved up in 2020, around November 2020, and then made this high in Jan 2021. So in 3 months it moved up very quickly. I mean, doubled from 1600 levels. It went up to 3800 levels, more than doubled in fact. So very sharp up move, then some consolidation, then again an up move, and now again some consolidation. So it's making higher highs and lower lows for sure. So a good momentum trade. So this would be a very good price for some momentum trader to probably enter in. It's a slow moving stock, takes some weeks to consolidate, but when it moves, it makes big moves. Like it won't take you more than a week to make like a 30% gain if and when the stock moves. So it needs to move up from here, break this high, and then the next target automatically becomes the previous all-time high, right? I don't know what this company Sundaram Clayton does. Let's see. There's so many companies listed in the market that we have no idea what they do. Sun Clayton. Alright, let's see. So they are in the business of manufacturing and distributing aluminium die castings and non-ferrous gravity and pressure die castings. Okay. Alright. ROC is not that great. It's okay. Debt is extremely high at 2.4%. That's also not good. Let's look at the financials to understand what's happening here. So quarter on quarter results stupendously improving. Operating profit margin is also stable. Profit before tax is highest, close to highest ever. And net profit is at 127 crores, which is very far away from its previous net profit of 200 crores. If we look at a longer term picture, then this stock has been growing crazily, right? Just look at the financials. In 2010 it was 5,000 crores, then 7,000, 8,000, again 8,000, then year 9,300, over here 11,000, year 12,500, again moved up. So the numbers are just going up. Apart from 2020, the numbers have been growing exponentially. Their profit before tax has also grown. The net profit though is not growing because their interest payments are also going up exponentially, right? Let's look at the borrowings, and if you see, the borrowings are at 10,000 crores. So they seem to have taken some loan in 2018, and since then their borrowings have just been sort of pretty much the same since then. So that the debt is extremely high, which is a concerning factor for me. FIIs have taken some position here. Domestic institutions are already invested in the stock since the last couple of quarters. Their holding is pretty much the same. Public shareholding is very low at only 10%. But this high debt is something which is not really encouraging for me, because high debt companies can get beaten down if interest rates go up, or if some other geopolitical tension arises because of what's happening out in Ukraine, so that could affect business going forward. So better to avoid this sort of a company. The chart pattern is strong. It's best to avoid this because the debt is very high, and you want to avoid high debt companies at this point. Let's move on to RBL Bank. RBL Bank is trading at rock bottom levels. No point in looking at this. VIP Industries. Now this looks interesting. Okay, so it made this high back in 2018. Then a breakout happened right here in 21st March. And now it looks like it's coming to retest this breakout level. Definitely strong indication. So very simply, our target is going to be the depth of this entire consolidation range, and you just put that depth right on top of the breakout level. Then the potential target for the stock comes to 1100 odd rupees. Now if we were to calculate our position sizing, then let's look here. From the current market price, it's a gain of 60%, and the ideal stop loss would be over here. at 517 rupees levels. Close to 500 rupee levels. That would be the ideal stop loss. So in this case, it looks like this retest is still not complete. If I look at the daily chart, it looks like it might come back down and touch this line again. So if it does do that, that would be a very, very good entry price, because that brings your loss down to just 22%, your risk down to just 22%, and your gain to close to 69-70%. So definitely a stock in very nice strong momentum. I mean, if you just look at this, it's a nice steep up move. I wouldn't say steep, it's a nice gradual up move. It's not run up like this, it's running up nice and slow, making higher highs, higher lows. So definitely a good sign. Let's add this to our tracker. If we get it at lower levels, that would be an amazing trading opportunity. Prices 666.25, strong momentum, breakout already done, retesting the levels of breakout. Also, VIP Industries, I think, is the manufacturer of those travel suitcases and etc. So with the industry with the reopening happening again, I think VIP Industries can definitely make some good gains in this quarter. I mean, you can clearly see it from the sales, right? When the lockdown happened, no sales, then sales slowly started picking back up, and now it's posted in the last quarter results of December. You can see that it posted 400 crores in net profit and 400 crores in sales and 33 crores in net profit, which is very good. Margins are also decent. So I think business is picking up with the economy picking up again and traveling picking up again as well. If we look at the shareholding pattern, then see, this is the interesting part, right? FIIs are increasing their holding, even though they are selling so much in the market. Every day you might be seeing that FIIs have sold 2,000, 3,000 crores. But over here you can clearly see that there are a group of FIIs who are also pumping money over here. And domestic institutions have reduced their holding by 2%. Public holding has also gone down. And very promising sign is that promoter has increased their stake mildly, not by much, but mildly they have increased their stake. So that's also a pretty good sign. If we look here, then Mr. Jhunjhunwala has exited the stock back in June 2021. So Mr. Jhunjhunwala looks like maybe he booked a loss somewhere here. Didn't wait for it to go up. But now let's see. I think this is a good trade. Definitely worth taking into consideration. So our target entry price will be somewhere here near the previous breakout line, so 634 rupees. Let's keep it 635 for simplicity. The target is coming to, let's see here, the target is 1067 rupees. And the stop loss is going to be 491 rupees. So the potential loss is 22%, the potential gain is 68%, good risk to reward ratio, and this stock is currently waiting for entry. So we have found how many trades up till now? We have found 5 trades up till now, out of which there are 3 trades with a potential gain of 50% and above. 1 trade is already active, in my opinion, EIHOTEL. So I think a good find in like less than 50 minutes. So hope you enjoyed watching this video. Hope you learned something new in this, and keep your positions light. Market's extremely volatile. US market is moving down, FIs are selling, geopolitical problems are happening. So it is a risky market right now, but we have to continue on our path of mighty trading. We need to continue looking at charts. We need to continue learning of how the situation develops, and I am 100% sure that we will come out with a super profitable year. So thank you for watching the video, and goodbye.